On today's episode, we are going to take a look at CuriosityStream. This is a stock that has been very popular, especially in the fintech community. Unfortunately, the stock is down about 20% after reporting earnings. So on today's episode, we're going to take a look at those earnings. We're going to take a look at the good. We're also going to take a look at the bad, and I'm going to share my overall thoughts. This is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and stay tuned where I live stream here on YouTube, taking a look at stocks you want me to look at. So let's get started. Like I mentioned, today we are going to take a look at CuriosityStream, and for those that are not familiar with the company, this is one that deals in the streaming world, a streaming platform, but mainly in educational content. That's their niche, right? That's what's super special about them. If we take a look at CuriosityStream, right now the stock is sitting at $8.94, and from its 52-week high, the stock is down 61%. Just alone today, it is down 20% after reporting earnings, and this is traded under the Nasdaq as ticker CURI. Right now, market cap is below 500 million, closer to $470 million. So first, let's just try to understand why the stock price dropped. Main things are revenue did not meet expectations of analysts. We're going to see they're still showing strong growth, but it did not meet expectations of analysts. The second thing we saw are some of their losses were bigger than what analysts expected. And finally, the last thing is their overall year guidance is a bit short compared to what analysts expect. So I do want to say those are the three major reasons the stock price is down. But I want to say the earnings weren't too bad. For those that don't know, CuriosityStream is in my portfolio. This is a tier 3 stock. So now that we understand about the company, now that we understand why the stock price is down and seeing the overall stock price movement, I want to take a look at some recent news. But first, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so now let's take a quick look at some recent news that the company reported yesterday during their earnings. The first thing is CuriosityStream acquires One Day University. One Day University provides access to more than 500 engaging talks and lectures from the best professors at more than 150 colleges and universities in the United States. So this acquisition does make sense, right? What I mentioned, CuriosityStream is that overall educational content. So One Day's university services include live in-person events, live stream series with Q&A, premium digital courses and subscription videos on demand, and hundreds of entertaining and informative lectures on science, histories, arts, politics, and more. So again, like I mentioned earlier, I do think this was a great acquisition. What I'm kind of having trouble thinking is, how is this company gonna integrate these lectures into their platform, right? Especially the live streaming series, that one's gonna be pretty interesting. But once they do come up with the system, I do think this was a great measure, a great acquisition for the company. Unfortunately, we didn't get how much they paid for it. But now that we took a look at that, let's also take a look at their most recent earnings that they just presented. But before we do that, remember, CuriosityStream is a streaming platform. And it's great to understand what type of business a company is in to really understand how we can compare it. Should we compare it to a year ago, or should we compare it to a quarter ago? Here in their financial results, like any other company, they compare it to a year ago. But I believe for a streaming platform like this is better and more informative for investors to compare it to a quarter ago. First thing I'm seeing is revenue was $9.9 million, and that was up 33% compared to the same time last year. But if we compare it to same quarter last year, last quarter was $11.4 million. So there has been a decrease in revenue compared to the same time compared to last quarter. So I want to say that's definitely a red flag. But there are some green flags here. First, they show total paying subscribers have grown to about 16 million. This is up 28% compared to the same time last year. If we take a look at it last quarter, it was 15 million. So they are seeing an increase of subscribers. One thing I am that's throwing me a flag is like, hey, why do you have more subscribers now but have less revenue? Is it that most of these subscribers are kind of free or coming from another service that don't have to pay as much? Because in theory, you would have expected that revenue to be up. So that's, again, another red flag that we have to take a look at. But the overall paying subscriber growth is strong both year over year and quarter to quarter. If we take a look at gross margins were 58% compared to 64%. Some might see that as a red flag. I don't, especially because last quarter it was around that same level of 59. Next, if we take a look at EBITDA losses, it was a loss of 15.1 million compared to last quarter of 15.5. So things I'm seeing, right? Quarter to quarter, I'm seeing growth in paying subscribers. Gross margins, not much of an impact in EBITDA losses. A small decrease in revenue, right? So some green flags, some red flags. My biggest green flag was the increase of overall subscribers. Now, if we take a look, the company did give us guidance for the full year, and they expect about $71 million in revenue. That's up 80% compared to the same time last year. If we take a look at their guidance they gave us last quarter, it's pretty much the same, 80% year over year. That same 71 million for the year. So to me, CuriosityStream right now, their earnings weren't bad, definitely weren't bad, right? Strong growth compared to the same time last year. Let me share my overall thoughts, right? CuriosityStream is definitely a tier 3 stock in my portfolio, and it's gonna stay a tier 3. Tier 3, in my opinions, are companies that I believe can grow over time and can be a great return compared to the overall market in the long term of things. But there's still so many unknowns. It's still very, very early in its stages, so it can definitely go multiple ways. And for that reason, it's a small position in my portfolio. I'm still happy owning CuriosityStream. No intentions of selling, but with these current stock price dip, it's definitely being added to my watch list on something I wouldn't mind adding a little bit more exposure onto. I want to say one thing about CuriosityStream. With such a low value right now on its market cap, I could see this being a potential acquisition sometime in the future by maybe some of the big streaming platforms that's out there. So I hope you guys enjoyed today's quick episode. Like always, make sure to hit the thumbs up, make sure to hit the subscribe button, and take care, guys, and see you next time.